Hey, how are you, brother? I don't know who else is over here. I just for going for the more who else is over here. Means without you and me, there is four more people are watching. I just need those people. Them. It's gonna be the recap. Not going to frame any trade right now. Just would love to finish dissection the rest of the day where I left around the morning session the way I told it and whatever I showed you through the Discord link. Just before going furthermore, let me know if you guys can hear me clear. Who else is over here? So write down hi, hello, whatever you would love to do. Just do that. Let me know who is here. And by the way, don't forget to push the like button as well. Live. Flora is here. M is here. Who else is here? Albert, brother. Someone else. Someone else is. Someone else. Could be someone. At least I know them. However, what is here? Start with this. So on the morning session, as I told you that this market has traded the 50% of this daily range from the beginning. You guys just remember this is just gonna be the daily recap. This specific range, that all the 50% of that range. Yesterday I told that it can maximum fall until here and then it will start to go higher. I will show you the more precise area where this market exactly fall. So for this daily bullish fair value gap is holding the market. I have this buy side liquidity around here, the very beautiful buy side liquidity. I'm interested to see this market will go for that buy side liquidity. Going to remove this daily range where you have already seen it has traded the 50% market is bullish. Just remember one thing, 50% bullish. Coming back to 4-hour chart, the 4-hour chart around here, this market build all of this buy side liquidity here. See this resistance zone, then market fall. That exactly 50% of that daily, what to say, I mean the daily fair value gap here is exactly 50% from the daily fair value gap. Buy side liquidity to that specific range, I'm interested to see it will keep going higher and it will come to this area, a specific area. So far I'm not interested to see anything else, but if you go for the same direction from here to here, is also the same thing from the 50% area market has traded. This is that hourly last fair value gap from the hourly chart, where here is the hourly last fair value gap market has traded. So it went through this daily bullish fair value gap. We came here to trade this hourly bullish fair value gap as well as the 50% of that daily range. Market is bullish. This is the buy side liquidity market is interested to go for. From 15-minute chart, more precisely below the hourly last gap, this is the 50-minute last fair value gap. Exactly the last fair value gap has been traded here. I showed you the buy side liquidity. That was the buy side liquidity here, here, and we had some buy side liquidity that has been cleared actually. That means this high and that high. That was the obvious liquidity. Market has cleared that liquidity. However, we are going to break all of this price action. So all you can see that this market first went higher, fall again, trade the high of this last hourly fair value gap, started to go higher around 9:30, market fall. All the time market worked with this candle or inside this bullish candle from 15-minute chart. All of this fall has been done inside that bullish candle from 15-minute chart, which I can use as an order block, as an hindsight. Okay, I'm not saying this is a best order block. Now if you look to this whole price action from 15-minute chart, it has taken the sell side liquidity, gave you the market structure shift, entry fair value gap, breakaway gap. Here, this is the breakaway gap from 15-minute chart. This candle trade the entry fair value gap, then started to go higher. lowest down close body close candle is an order block. I could show this to you like that way, but I'm not interested to mark this candle as an order block because this gap was more precised to me, which is the 15-minute last gap, rather than this small gap. So as an hindsight, I'm seeing that this market is trading this bullish fair value gap, sorry, bullish order block, that candle. Market is actually trading inside that candle. And if you mark the min threshold, which is the 50% of an order block, 50% of an order block, we call it min threshold, MTH. So this is the 50% which has been respected so beautifully. All of this market respected the 50%. You can mark it and you can check it where the market is reaching for. The buy side liquidity here, clean highs, buy side liquidity there, and we had some kind of, what to say, I mean the buy side liquidity previously over there. The whole day I told you guys to keep looking for buying opportunity. No sell is valid. Why is that? Because the maximum sell has been cleared over here. The big sell side pool has been cleared over here. Then this market fall a bit more to finish the unfinished business, or after taking the food, market come here to take the rest. After taking you food, you need a room to take the rest. This is that room where market came to take the rest. After taking the rest from lower time frame, from higher time frame, this is the room from the daily chart where the market took the rest. So you are seeing a week over here. After clearing the liquidity, trade here, market is reaching for this buy side liquidity, that buy side liquidity. Now I don't need to target this buy side liquidity, that buy side liquidity. I don't need to target that because the range is too far and market is not going to take that by today. Maybe it will take 1 week, 2 week, or maybe just by tomorrow's news, it's going to clear that buy side leg. I don't know that. I don't need that. So what I'm going to do at the beginning, I will look for new buy side liquidity around the market. However, this is how this market has came here around this area, and then this is going to take that buy side liquidity. If you look for this high and that low over here, around here, this low, the whole range. If I mark from there to there, this is the whole range. Now, to that specific range, come here, and then market started to retrace. If it wanted to fall, it could fall from here, from the 50% to that specific range over here, from here to here. It could start to fall. I was interested to see these buy side liquidities are going to be cleared. So what I want to see over here from the 15-minute chart, that market will come to this deep premium area. This is the very deep premium line, this big bold line. That is the big bold line. I would love to see this market will go higher and come to this deep premium. Then it will fall or whatever it will do. Finally, that is gonna be the confirmation. I'm going to go higher. I'm not interested to fall. I'm going to go higher when it came to this deep premium. So this market will start to go higher here to that specific leg, which is inside that leg. That leg has done its job when it came to this deep premium area. This leg has done its job, so it has already confirmed it is going to clear that buy high, that high. Okay, so what I told you today, my target is this low of this hourly gap. So I want to see this market will come here by today. That is my expectation. Why is that? Because this is the last fair value gap inside this deep premium area. Should come at least over here. Even if it failed to clear that high, it will come here, build relatively equal highs, will fall a new leg. You will mark a new leg, 50%. Will expect it will trade the 50%, then it is going higher and going to clear that buy side liquidity. That is why I told it is, this is low is my target, not constant encroachment, not high. The low is my target. The last fair lookup reaction will prove the retail trader to take the sell. It, that is why I'm saying to come over here to build the resistance. Then it will fall until the 50%. Then it will go higher, clear that liquidity. Will go through this hourly last fair value gap over here from the hourly chart. Okay, so far over here, this is a new leg. That leg is inside this leg. I don't need this leg anymore. I'm going to mark that high and that low over here. Okay, that is the low. This is the high of this new leg. This is the low of this new leg. Now over here, I have a lot of gaps, so please don't get confused. This big bold line is the lower quadrant. This is the equilibrium. Beautiful way. I'm going to remove this one. I'll add that on later. Okay. This high to that low. This is the equilibrium. This is the lower quadrant or the deep discounted fair value gap to that specific leg. The mother leg or this leg has confirmed that I am going to go higher to clear that high. This mother leg has confirmed when this market came to this deep premium area. Now this child leg is going to follow the mother leg. What the child leg is going to do? It is going to trade the equilibrium, or it can fall a bit more. It should not come to this deep discounted fair value gap aligned with the deep discounted quadrant level. It should not touch this one. Without touching this, it should keep going higher, clear at least this child high, and then go toward that mother leg high. Okay, over here, around here. So I am expecting it will work mostly with the 50% of this area. If it can fall a bit more deeper area, but should not come to this area. Now if it come here, it means either it is going to clear that low, or this is going to be a long-term consolidation. Long-term, not this type of a small consolidation. The whole day you will see a consolidation day. Market is going to be like in the same range. Here you got some range, but you will not get those range if it come to this deep discounted area. So these two things is going to happen. It's not going toward that mother leg high, okay, whatever the mother leg high is here. It's not going toward that area. If it come over here, as it is going to support or follow the mother leg. So here this is that small price action from 15-minute chart. Now I'm going to go back 1-minute chart. Now remember, this is that 50%. Below this 50%, this is that mother leg lower quadrant where the market should not come. So I'm going to remove this one now and going to keep or show you the things I told you through my Discord. Okay, this is the morning session price action over here. If you guys remember, I told that until it's not broken, this market will keep going higher for this buy side liquidity. This is the most important buy side liquidity market is going to clear until it's not broken. And then it came inside the lunch hour. I don't care about the lunch hour. No trade is valid for me inside the lunch hour. After lunch hour, around 12:50, this is my area where I will start to look for the buy. Now, if you look on your right, you'll see around 12:50, still the market is above this line, which is respecting, right? This gap, it is respecting. What I'm looking for, buy. Now, can you please tell me, until now, is there any buying opportunity? Until it is not going to go below this area, is there any buying opportunity over here to the, from 12:50? I don't see any buying opportunity. Not fair value gap, not two fair value gap, not order block, not nothing, 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 nothing. So there is no buy, no buy, no buy. And then market fall here. What it has done? It has cleared not only all of these lows, but also the extreme low over here. This is the extreme low. Now, is it random? I need to extend this last fair value gap that is still not closed. This gap is still not closed by the body. So I'm gonna use or reuse this last fair value gap from 1-minute chart. See this 1-minute chart? This is the last fair value gap that I'm going to use it, as well as the order block. Now, I'm not going to add the order block because it's going to be much more complicated. But if you look on your left, there is a fair value gap over here that has been traded here by that specific order block or lowest down close body close candle. If you mark that candle, extend it to your right, you will be able to see that how beautifully this lowest down close body close candle has been worked. But I'm not gonna make it so much complicated. Adding the order block instead of that would go for the last fair from 1-minute chart. From 15-minute chart, you already know that it's respecting the whole area, this area. Adding the volume imbalance, you will get the hourly bullish fair value gap. So if you add the hour volume imbalance, you will see this has traded that hourly bullish fair value gap. However, this is that last fair value gap that is still valid until it's not broken. I can't think that this market will keep falling and clear all the lows, or here, where was the lowest low? It is going to be cleared. I can't think like that way until this last fair value gap is not broken over here. However, guys, until now, whatever I told you, do you guys have any confusion, or kind of like everything is running cycle way? Okay, something, how to say that, around, I mean, is that clear whatever I told? Because I would love to enter into the new phase now. It's gonna be much more complicated. I had only planned to make all of these things members only live, but I want to make sure that people who has the confusion about ICT concepts to think that it's nearly impossible to know how this market is going to react. It's nearly impossible. No, they are wrong. They didn't give enough time here to these concepts. That's why they are going to say this is random, this is kind of fraud, all of these things, because they don't know what they're saying. I will show you the much more precise thing here. Very, very, very precision. So until now, whatever I told, does it make any sense to you guys? Or is it kind of confusing? Is that some kind of confusing, or is it clear? Okay, brother, I don't have any confusion. Just I need some reply from you guys. If you don't give me the reply, I can't continue this, because what I'm going to show you now, it's 1,000 times complicated than whatever I showed you until now. I need the confirmation you got everything clearly until now. If you didn't, I will go through from the beginning again. I don't have any problem, but I need to make sure you got the things why this market is moving toward the buy side liquid. I need some reply, please. Thank you, Dora and MGFX. I got two reply. I need some more reply, please. Either give me the reply or leave the stream. Do that like that way. I need to make sure your your response is responding me. And if you think that I am treating you guys as just a viewers, you're wrong. You're not my viewers. You're my brothers. You're my sisters. You have to make the money. You have to understand this thing. You want to taste it. You're not my viewers. I don't treat you as my viewers. Now I'm getting some reply. Now I'm getting some reply. Don't treat me as an YouTuber, okay? So you are watching a lot of YouTubers. I'm just like one of them. Don't treat me like that way. If you do that, just leave my stream and leave me alone. Either you have to be the member of my family or you have to leave the family. That's the only way. And if you are my members of my family, then you have to treat me as your brother. I'm not interested to consider any of your loss. Thank you so much. By the way, I was making a cigarette actually. I was talking bullshit. However, all of this bullish gap has been broken. Last fair value gap, and this is the last fair value gap. Below this, there is no other last fair value gap. They have been broken. When it has been broken here, I'm not interested to catch any kind of buy below this area. Now you can ask me, why this gap? Why not that gap? Why that gap? Why not that gap? So I'm going to take the buy here, why it's not valid, or I'm going to take the buy, why it's not valid, or why you are saying the buy is only valid over here, right? Because this is the last gap to that specific leg. This is the last gap to that specific leg. This is the last gap which is below all of this price action. So of course this is the strongest bullish last fair value gap. I don't have any confusion about that. Comparing with three fair value gap, this is the last or strongest fair value gap. Why I'm saying that no buy is valid below this fair value gap? Why this gap is important? Listen to me very, 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 very carefully. One, two, three. Look, this is the first time this market came to this fair value gap over here. Beautiful reaction. Come back second time, third time. So beautifully it has been reacted from this fair value gap. Remember, this is one of the best, strongest fair value gap. You can use this fair value gap in both way, buy or sell. Any way you want, you can use this fair value gap. Look at that fair value gap. For the first time, it has been so beautifully, it has been respected over here, so beautifully. But when it came to the next time here, after this is the next time where this market came here, how it has broken this fair value gap. Just look at this. So beautiful, right? Fall, closed below, higher, closed below, higher, closed below, higher, closed below, higher. So a lot of consolidation over here. This gap has done its job exactly over there. When it has been violated, maximum you will allow a gap to be broken two times, not third times, two times. One time it's broken, two times is broken, third time when it has broke below this gap has no value anymore. I'm not interested to use this gap anymore in my life again. I'll keep it here because it's 100% balanced. There is nothing imbalanced over here. Now, brother, it happened here as well. Why you are going to use this gap, not that gap? This low has been cleared here. That low has been cleared over here. This is the last fair value gap, strongest fair value gap. That means when it came here, I knew that it is the strongest. Of course not. I didn't knew that it's gonna be respected like that way. So I have waited to see how it is going to be reacted. Look how beautifully I'm going to participate in this price action. I saw market fall here, trade this last fair value gap here, around here, violated this a bit. Until now it didn't come here. So first of all, when you see this, it's already broken, because it's very easy to see. One time broken, two time broken, three time broken. Perfectly, it's clear that it's broken. Come here, tap to this fair value gap, this old fair value gap that has been respected so beautifully over here, around here, so beautifully. Came here, respected for the first time after closing below this fair value gap. Perfectly trade this, fall, came came here to this last fair value gap one more time, respected. What should I think now? This is the gap. If this market can close above this gap by that specific area, let me show so that you can understand where I'm talking about right now. Let me. This is the area, okay? This is the area where I'm expecting this market will closed above this fair value gap, and I will use it as my support. I will take the buy over here. This gap has been respected over here. This is the low that has been cleared by here. I showed you yesterday this specific gap to use it as a support. Remember, this is that gap. Here and here, both of these gap are the same thing over here, but you can't use this gap around here because it has been violated before coming here. Before coming here, it has already been violated. So I can't use this gap, sorry, that gap anymore. It has violated already before building the setup, but this gap has the power to give me that setup. So what I'm watching, market fall, tap here, respected so beautifully below the 50%, fall one more time to the last fair value gap, respecting so beautifully. Market is going higher. Swing high is a valid swing high for shifting market structure. One of the best swing high for shifting market structure. Extend it to my right. I'm interested to see some kind of market structure shift. One tick above this high. If I see that this gap is my entry, I'm going to take my entry over here, around here, depending on that 22 IT model. It didn't leave any fair value gap over here. It has closed one tick above this gap. The very next candle, I'm gonna take the buy over here. Stop loss below this fair value gap over here. Sorry, not fair value gap, below this candle around here, which is going to create it as an inverse gap. Going to take my buy over here, send it higher. I will look for that. What happened here? Remember, first time should fall here, second time should break it. What did happen? It trade the high, perfectly respected, fall, trade this fair value gap, more importantly fall until the lowest down close body close candle 50%, which is the order block, depending on the same time frame. Fall again, started to go higher, closed above this high now here. When it has done around here, closed above this simple gap, can I use this same thing I was expecting over here? No, I can't do that. It should done it over here. It didn't do it. Instead of that, it fall. So it is going to happen the same thing here. I'm not going to believe that, because it should done it here after doing the job what it has done over here. A very small piece of price action, very confusing, but if you focus over here, you will understand the logic. First time it closed below this gap. This is the last gap which has been respected so beautifully, closed below this gap. I want to see it will be respected this gap and will fall, take some liquidity. Some kind of liquidity is going to be taken after rejecting from there. It fall here, then this wick appeared on the chart over here after tapping to this gap. Just look at this, tap here, fall here, closed there. This is how this candle appeared. That means cleared this liquidity. Then one more candle, two more candle, fall again, trade that wick over here. That wick has cleared all other wicks traded the last fair value gap. Remember, it didn't leave any wicks on its left. All the wicks has been cleared over here. Fall here, trade that wick quadrant level, started to go higher, go through this fair value gap. That fair value gap is a reclaimed fair value gap previously used so beautifully. I'm gonna use this gap right now after doing all of this job. Didn't happen. Market didn't do that. Fall again. I'm not going to think the same thing I was expecting over here. Why? Because it takes too long. What should happen here? It takes too much longer time to come here. I'm not going to believe it. Fall again. I'm now seeing the pure consolidation. When I will see the pure consolidation, market is consolidating. Market come here for the last time, fall here. Today's morning session, I think Donchiu or any, I think it was Hamad who told me or asked me, brother, how do I know that? Or sorry, when he entered, this market doesn't move anywhere. I told him, always expect the speed in between the macro. It was very clear and bold statement. In between the macro, 950, 1010, 1050, 1110, 1250, 110, something like this macro, plus 30 of the hour, 30, okay, 130, 230, 330, 430, 530, any kind of 30 level. Finally, this consolidation is going to happen. How did I know that it is going to happen over there? Because on my Discord, if you take a look, I just marked the high and the low, and I told that when this market is going to close above the consolidation high, this is the consolidation, when around 130, around 130, this is the 130 candle, started to go higher, fall to this fair value gap. Look at the speed, around 130, not exactly 130, maybe 128, maybe 129, maybe 130, maybe 131, maybe 132. 2 minutes before 30, 2 minutes after 30. Look this 5 minutes, you will get almost every time the speed on the market. I'll show you more proof. However, I was expecting the run over there, so I told my Discord people, mark the consolidation high, which is here, and the low, this is here. Now I'm going to skip the lower version. Why? Because all of you know that I'm only bullish. So all of this discussion was about my market direction. What was my market direction? Bullishness. I was bullish for the rest of the time. For the whole day, I was only bullish. I'm going to skip the consolidation low. I'm gonna skip it. It doesn't have any value to me. So if this market fall and did the same thing in an opposite way, I will let that go. I'm not going to participate on that fall. So you will see the whole day market was bearish. I was wrong with my bias and market was keep falling. I didn't participate on that price action. What I have done, I'm going to remove this one. I told them when the first candle will close above this consolidation high, look for a gap that's gonna be your breakaway gap. This is your breakaway gap. That means market is not coming to this gap. Before, not look over here, not this gap, not this gap. This is the breakaway gap, not this one, because this one is inside the consolidation. It has another level of power. I will talk about that in a moment. But this gap is not the gap you are expecting right now. You are expecting this gap is going to work as a breakaway gap. Just above the gap, whatever gap you are going to see, that's going to be your entry gap. So you will be interested to take your buy from this gap. Now this candle should give you the entry. Unfortunately, this market didn't give you the entry. Market is going higher, market is going higher, cleared that swing high over here. That is that swing high that has been cleared by that leg. What market has done, I told you, look at the magic, what the market left over there on your top. What market left? Abracadabra. That was the buy side liquidity. Above this buy side liquidity, you have this extreme buy side liquidity. See this buy side liquidity over here? Extreme buy side liquidity. Above this buy side liquidity, you have all of this buy side liquidity. Around here, all of this buy side liquidity you have. Okay, all of this buy side liquidity. So what happened on this market? You missed the entry over here. Remember what the market is going to do. Market is not going to give you the next entry opportunity. This is not going to happen all the time. This is very rare, very rare. Market will keep going higher and it will come very near to this liquidity level and then it will fall a bit, boom, market will clear the liquidity. What you have seen here, this is the exact scenario that should happen here. Okay, I'm gonna show you one more time. Whatever you are seeing right now, see this, this is you are going to see over here to that leg. You are not going to see this leg all the time. This is very rare, very rare. It means that market wants to give you an entry opportunity. That's why this market fall over here. It wanted to take you with him. Now of course you will say, brother, the people are not, market maker doesn't know about you or ICT concept or all of the things. This is for the sake of the conversation. Okay, I mean, market is falling. He is not falling to take you. It means that it is, this is your opportunity to find that entry. Now, however, when this market came here around this area, left that buy side liquidity, does that they have any value anymore? I don't have any value. Why? It takes too long to come over here to this fair value gap or that fair value gap. It takes too long. So first, I have framed a buy from all of this consolidation area by knowing how to use this consolidation area. Then I waited for the entry from the entry gap. Unfortunately, this market didn't give me the entry. Always remember the immediate reaction. Market came here to this gap after a long time. It's not a valid entry anymore. It doesn't have any value to me anymore here. Okay, to that specific leg here, I will talk about a lot of things now. It's gonna be getting complicated. Focus very carefully. Consolidation high, consolidation low. I'm gonna mark the quadrant level to this consolidation high, sorry, the low, consolidation low, consolidation high. This is the upper quadrant, this is the 50%, this is the lower quadrant, this is the low of that consolidation. So I have divided this consolidation into 5 lines. Okay, this market can maximum, it is allowed to come until the upper quadrant level of this consolidation zone. If it come to this 50% and doesn't go through this 50% with speed, with this type of speed, see these candles or this type of candles, if it doesn't do that, it will trap into another consolidation. So here the consolidation will bring the consolidation here again. I'm not able to show that to you right now, but look at this area. Okay, it's not a great example. I'm just randomly trying to give you an example. You will do this by yourself. When it came to the 50%, if it doesn't go through this area, it will start to consolidate like this way. This is the consolidation power. So whenever you will extend it to your right, you will see a lot of the times market is going to consolidate around the same level it consolidated at the beginning. That means if this market really would love to go higher, if this market really would love to go higher, I'm gonna allow this market to fall maximum until this quadrant level, upper quadrant level, not to the 50%, because if it come to this 50% inside this consolidation, either it will consolidate or it will go through this consolidation and market will keep falling. Both of these cases, I won't be able to enter into this market. Instead of that, I'm interested to see this market will keep going higher. If it would love to keep going higher, why it will keep going higher? If it doesn't want to fall, why it doesn't want to fall? First, it didn't leave any liquidity. This low has cleared all other lows. It didn't leave any liquidity. First reason. Second reason, it has traded, it has fallen, cleared the liquidity, did the consolidation, make the breaker here. Break. This is the breaking area. It can't break this area. And then left that area with too fast, with so much speed. Come back again, last fair value gap to that specific leg. Why not this one? Because this is around the 50% of the consolidation. This should not be traded. If this market trade, that means this market has a possibility to keep falling to clear that low. Remember, this is that area. How do I know that this is the area I should not look for? Mark the high of this whole leg. This is the low that has cleared the liquidity. That is the high that has cleared all of this liquidity. So mark that high and the low. The whole dealing range in between this price action, this is the dealing range. Okay, so here high and the low, this market came until here, built relatively equal highs over there, fall, equilibrium. This is the best area for this market to reverse. If it wants to reverse from here, no problem. Here, no problem. Absolutely beautiful there. Maximum to this fair value gap over here around this area. Now below this area I have another fair value gap in conditional way. This is the entry fair value gap. This is the last fair value gap. I called it last fair value gap. This is the entry fair value gap. However, I know that this is the deep discounted fair value gap related with the deep discounted line from 15-minute chart. Remember where the market fall very near to this lower quadrant level here, that area where the market fall until the lower quadrant here. That is that area where the market came until the lower quadrant. Always failed to trade the lower quadrant. This was that gap where this market should not come. This is that gap. Remember from 15-minute chart. The same thing happened over here from the 1-minute chart. I have started to look for a buying opportunity while it came here. Just here, I'm now interested to look for a buy exactly over there. If I find any kind of opportunity, buy is only valid because buy side liquidity, buy side liquidity, and finally until here around this area. However, I can see that market is falling, so I can be wrong that market is not touching here. But my expectation was it will touch over there, so I can be wrong over here before the 5. So I'll see that later. However, it market fell to this entry gap. I'm watching it as my last fair value gap to that specific leg as the market can't come here. Is that clear to all of you why this market should not come here? First, the range, dealing range, lower quadrant, deep discounted area. If this market would love to go higher, it should work with the premium area or maximum until the equilibrium. Never ever touch the lower quadrant or the discounted, deep discounted fair value gap. Deep discounted fair value gap. It is discount, but this is the deep discounted area. If it come here, market either going to clear that low or it's going to be consolidation. On the other hand, this is that mother of the consolidation mother, okay, origin consolidation. This is a whole breaker. The 50% of this consolidation around this fair value gap, around with this fair value gap. So if this market come here, either it has to go through this gap or it's going to be consolidation. It can't go like this way. It can't do that. This is the second reason this market should not come here around this area. What could be the third reason? Look at this fair value gap, the last barricade which I have been using here. I want to use this gap right now after this consolidation for the last time as a support. Not going to predict a buy over here. Going to see that can it work as a support as it has been violated here, like this guy, sorry, like that guy. Same thing happened here as well. So I should not use it, but I will use it just to find the last support before tapping to this line, lower quadrant level, before tapping over here. It's not valid. It's not valid, but I have an PDRA that previously I saw it has been respected so many times, not like one time. So many times it has been respected. So I would love to see if it can make it as a support or not. However, you can see that perfectly market came here, build the market structure shift. Now it's very confusing because doesn't seems like a good swing high over here. I agree with you, and to be honest, I was not also interested to take the buy over here. To be honest, it was not my plan to take the buy here because I was predicting this market will fall at least to the top of this gap. So until after seeing this candle, while I have seen that candle over here, and if you see, it has traded that whole range this high because all of this price action was inside this 1 minute leg here, 1 minute leg. This was the 50%. So I was thinking that first of all, it will tap to this line over here and then it will start to fall to clear this obvious liquidity, these two lows over here, and then it will tap over here, fail to touch it, will start to go higher. That was my expectation, to be honest. So I didn't frame this one. And you can see this candle tap here to that 50%. Next candle is a bear candle. Next candle is a bear candle. This candle fall until here, 50% of that gap exactly to that 50%. Then it reversed. That fall I was expecting will clear this relatively equal lows. Now, one thing I didn't check, I will check it right now. Did ES took that lows or not? I will just check it right now. I didn't check it. Okay, it also failed to clear that loss. However, if it could clear that loss, that could be the best case of scenario in my opinion. I was not looking for a buy over here. Is it valid to look for a buy? Of course, you can look for a buy over here. I don't have any problem, but I was not so much confident that it's gonna work. So I had no intention to like look for the buy. When this candle appeared, I give the message to my Discord, mark that candle as and observe that candle. This is the candle which is the breaker block. Low, high, lower low. Whole of this setup, if you look for the 22 YT model, you will be able to see that this high, which is a valid swing high for shifting market structure, has been shifted over here, around here. This market trade this bullish fair value gap. Of course, it has been violated. This bullish fair value gap doesn't care, but don't care because according to ICT himself, the 22 YT model is valid until the low of origin low is not taken. So even if this bullish fair value gap has been violated, it doesn't mean anything that it's a it's a failed 22 IT model until this low is not taken. However, then this market went higher and finally market trade the build the water block, trade the water block, like all of this lowest down close body close candles. Okay, then this market closed above these body close candles. This is the water block that has traded this body close candles. After trading this body close candles, this is the first bullish fair value gap above the order block level, not this one, above the order block level, first unfilled fair value gap. Market has closed this fair value gap, which I wanted to see unfilled, or it will keep going higher for the all-time high. Okay, from here. So that has been filled 100%. When it has been filled 100%, just today's morning session, what did I show? If it fill this 100% and then build another lower low, then this will be my breaker block, which I was expecting by that candle, that it will fall and go below this low. This is going to be my breaker block. I was expecting this is going to be my breaker block, but unfortunately it didn't happen. It come until here, then close around here above the 50% of that dealing range 50% over here. When it closed above this dealing range 50%, immediately I told to mark this candle as the breaker block. I told that this is the one of the strongest breaker block. Out of 100 times, it will give me 95 winning trade if I go for this breaker block. Here, I know that you are thinking that this is the entry candle. This is not the entry candle. I just told to mark this candle. When I told that, first thing you have to understand that until the body doesn't close above this candle, it's not a valid breaker block to take the entry. So when I give you the message, that was the candle here. So you were thinking to take the entry from this candle. No, it's not valid. It's not the entry. When this candle appeared on the chart, it has been validated as a breaker block. All I need to know, see, can it give me the entry within 3 candle? Next candle, tap here to the top of this breaker block very precisely, tick by tick, below this market where, or below this breaker block, where is going to be my stop loss? Is there anyone who can tell me that where I should put my stop loss? I have talked about this at least 1000s of the time. Below the breaker block or above the breaker block, where should I put my stop loss? Now it doesn't matter because this market never come below the breaker block, but if it started to fall, where should be my stop loss? Is there anyone who can tell me that? I'm sorry, so sorry guys, asking so many questions, but as I promised you, you are not my viewers, you are my family members. If you wanna be a family members, you have to learn these things for free from me. I know people doesn't give a shit about the free things, but you have to understand this, because otherwise when some people will come and they will say ICT is random things, you will start to believe them. You will start to think that, oh wow, it's really a random thing. It's not random, it's very precise. Not the CE, brother. Lower quadrant, not the lower quadrant. Not even a single person who can give me this idea. I'm gonna repeat it one more time. Either write it down or forget it. I'm not gonna repeat this ever in my life again. Below the breaker block, wherever you will see the inversion gap or the lowest inversion gap, you have to cover that inversion gap, or the candle has built the inversion gap below the breaker block. If you don't have any kind of inversion fair value gap below the breaker block, you don't need to worry about the stop loss. You can simply put your stop loss few ticks below the breaker block by thinking that okay, I'll be safe. But if you have any kind of inversion fair value gap below the breaker block, always cover at least that inversion fair value gap, or that candle has built the inversion fair value gap, that candle low here, this candle low. So my stop loss is going to be below this candle low. Now you can see it's 31 handle. I have to accept it. I have to accept it. What else do you see? If I put it over here, I'm also gonna cover this gap, which is a new last fair value gap to that specific leg over here. That is a new specific leg has gonna be respected. Sorry, my stop loss is going to be uh, happily covered the upper quadrant or the upper level of this last gap as well. Now it's not an something you have to cover, but if you can, perfect. That is the best case of scenario. Okay, so always remember, below the breaker block, below the breaker block, whatever inverse gap, this is the breaker block. Okay, below the breaker block, whatever inverse gap you will see, you have to cover at least that inverse gap. If it is possible, trade the whole candle that has built that inverse fair value gap. Is that clear, guys? Consequent crossman, no. Means you should know. Below B order B. I didn't understand, Fadi. The breaker block. I also didn't understand, Dora. Is that clear? Whatever I told you right now? Did you get that point? Where should be your stop loss? Now you can't say that it's random, because I showed you in live how this market perfectly respected the inverse gap and then the reverse. So here, unfortunately, fortunately, market just tapped to the top of this breaker block, gave you the first entry. Where should be your target? This buy side liquidity. Remember, don't forget about this buy side liquidity, this high and that high. Market engineered the liquidity. So if I move this one, see, this buy side liquidity is marked over here. It's marked over there. Now I am showing this quadrant level because it's important to understand the market, how it is going to react. When this market has closed above the 50%, tap to the 50%, I'm gonna believe that it's gonna work as a support over here. The 50% is gonna work as a support. Market went here, bit consolidation, then finally this candle, that is the candle that has closed above this last fair value gap. Okay, now here to that whole price action, around this whole price action, below this last, below this, what to say, the buy side liquidity, there is a small gap around here. This candle low, that candle high. I'm gonna show you this candle low, that candle high. It's a two handle gap. I don't like to mark this type of gap as my last fair value gap. I don't like to mark it. Of course, market can be respected, which you are seeing over here. It has been respected because it is giving the reaction from this last fair value gap here, which is just two handle last fair value gap. Just let me mark it one more time, guys. It's important, trust me. Here, this last fair value gap, it came and gave you some kind of reaction, and later it has been worked as a the way we love to use, or whatever it is, bit respect over here, whatever it is. I don't like to mark this type of a small gap. I love this type of this gap, which is very easy to mark, very easy to mark. Now it can be respected from here. I don't have any problem. As an hindsight, I will say, okay, brother, that was the last fair value gap. This was the entry fair value gap. This is just an excuse. Okay, something like that. I don't like. I love to be wrong with this fair value gap. Okay, because I don't see this type of fair value gap as my last fair value gap. The most important fair value gap should be noticeable. I can notice it. I should able to notice that gap with my open eyes without marking it. So here you will you'll get confused. Oh, is there any gap or something? If you focus over here, then you will be able to see, oh, there is a two handle gap. But this gap, you can see so beautiful, and above this gap there is no other gap. Below this buy side liquidity, just remember, this is the buy side liquidity over here. Below this buy side liquidity, this is the last fair value gap. So I told to Dunchu, while he was asking or saying that if this market fall from here, I'm gonna throw my laptop through the window. I told him to mark this gap, to extend it to its right, and expect that when this candle appeared, okay, nobody is going to close below the concordant crossment of this gap. Not even a single body should close below this concordant crossment of this gap. Market fall here, fall one more time here, built the order block after this candle to close above this candle. I told them to mark this candle as an order block and the min threshold, the 50%. Why this gap? Because this is the last gap. If the body closed below this constant encroachment, then the marking order block is kind of obvious, because this, I'm not going to believe this gap anymore because the constant encroachment has been broken while the market is falling. But if it failed to close the 50% of this parallel gap, and I see this type of beautiful candle which is residing with this parallel gap, I don't give a shit about anything else because I know this is very strong order block. So I told them to mark it. What happened? Market trade this order block, min threshold of this order block, tap a very specific area, not a random area, upper quadrant to that whole dealing range, come back again, go higher, clear that buy side liquidity over here, around here. If I miss this breaker block entry, this was my entry opportunity from this last farewell gap. Now, order block entry is a bit risky. I'm not supporting this one, but this entry over here, that was the best entry after that breaker block entry missing. So if I miss this trade, I'll go for that trade. Now, this is for Dunsio. If you get an entry over here and after seeing this candle, you are saying that if it reverse now, I'm going to throw my laptop through the window. Why did you say that? From here to here, it was a 47 handle run. How can you hold a trade without clearing the partial? How can you do that? And later you will ask that I blow the account. Man, come on. You can't do that. Please don't do that. Partial will make you profitable. However, market trade this area and then finally went through this buy side liquidity. More importantly, that buy side liquidity has been taken as well. This buy side liquidity has taken as well. Finally, what market has done? This high and that high. What it has done? I'm going to mark this high in a more accurate way here. Going to my right hand side. What do you see over here? Do you really think that buy side is taken? What do you see, guys? Is the buy side is taken? Sell side has been created here. This low and that low, relatively equal lows. Market has created the sell side liquidity. What else do you see? Market has created buy side liquidity. I'm coming over here. Today's Tuesday over here. Tomorrow is Wednesday. Thursday we have CPI. Either of these buy side liquidity has a high probability to kept open until the CPI. So tomorrow is the lowest probable day to trade. More importantly, from today to until the second week of the February, every single day is untradable. You should not trade this market. It's untradable. I'm so sorry for my speaking, my English, because bit messy. Pronunciation is not good. What I mean to say, from tomorrow, which is 17th of December, to until second week of the February, all the trade is forbidden. What do you mean by that, brother? I have to push the button, otherwise my funded account will be gone. Of course you are going to do that, but you are going to do that, keep your account alive, not making the money from trading. From now, this market is the craziest shit ever. Don't believe me? Observe the market from tomorrow. Until 16, 17, 18 of the December, it's kind of tradable. That means this market really supports some period, rarely, but sometimes it violated, but sometimes it works so beautifully. Remember the morning session, how it was violating the PDRS, but look at the PM session, how beautifully, accurately respected the market so beautifully. I don't give a shit it came here or not. I have seen that the buy side liquidity or my target has been cleared. Buy side liquidity has been cleared. Market has traded this gap. Okay, perfect. I believe it will come here. It didn't come here. I'm wrong about my extreme target. I don't give a shit. All I need the run from here to here. Enough. That 82 handle is more than enough. I even don't need this whole run until this buy side liquidity. I don't need that. I need this profit until here, around this area. 57 handles, more than enough for being profitable. That's all. So however, guys, this market is not random. It's not something like you will think, oh wow, this is random, we can't frame this trade. Told me where I was confused, where I was thinking that, oh okay, I just outlined them. whatever I told you, did it happen like that way? Whatever I told you over here, the way this market is going to react over there, did it work exactly like that way? Now, market didn't give you the entry, give a shit. But the way I was expecting, did the market work like that way? This is predicted. This market is predicted market. But from now on, it's gonna be difficult because people will be in rush to make some money for the Christmas, and that's gonna be shit. Okay, so please be careful. You're still trading. I hope that this live was a bit insightful. I tried my level best to give you all the information. If I forgot something, please forgive me. Later, I will try to find that out and I'll of course share it to you. I always try to not to hide anything inside of myself. So I of course give my level best so that you guys can got the information. But you have to do the hard work. You have to study it. You have to see how did I know that this breaker block is the strongest, and how can I confirmly or confidently can say that this is going to give me 95 winning trades out of 100 trades. How did I know that? Because I am seeing this again and again. I have done the study for learning this breaker block, not randomly or whatever it is. But you have to do that same thing. If you can do that, I hope that you will get the beauty of this market as well, and you are not going to be convinced by those people who are saying that ICT is random, it's just for entry opportunity. Okay, please don't fall into the trap. Don't fall into the trap. Let me know, was there any confusion or was there any question? If you have any, let me know that I'll reply that and then I'll close the stream. Okay, it's already 4:22. I'm so sorry to keep you here, but yeah, just let me know if you have any question. Yes, yes, yes. Okay, how did you learn this amazing way? I did study, brother. You have to do the study. If you do the study, that means whatever you are seeing, if you keep watching the chart, not to look for the entry, don't ever think to take an entry, just watch the market like this way, the mark, okay, like this way, see what is happening. You will see a lot of things just by this open chart, a lot of things you will see. But the problem is whenever we see the chart, we only think to take an entry. That's our problem. But when I'm seeing right now, what do I see? Do you know what I'm seeing over here? I'm seeing that, okay, all of this consolidation over here. I'm so sorry to extend it, but at the same time, please let me know if you have any question, please. If I'm seeing this market, what I'm seeing, this market has cleared all the buy side liquidity. All the buy side liquidity has been cleared, and it left some sell side liquidity here, relatively equal lows around here. This is the whole range, a new range. Okay, I would love to see that this market will work until the 50%. Just let me show you this. I'm not saying this is going to happen, but what I would love to see, it will come to this 50%, exactly like this way. This market will work. It will come here, or maybe a bit below, then it will go a bit higher for the retracement, not going to the deep premium area, then it will fall, and then some kind of consolidation, take the buy side liquidity, finally come here to this lower quarter will use, this consolidation low is going to be cleared, and then it will start to go higher again for the buy side liquidity, like same this way. This is how it is going to work, by working with the premium and discount. So when I'm watching the chart, I'm watching how this market is going to play, where is the liquidity, where is the fair value gap, and where is the dealing range, where this market is dealing with. Is it dealing with the 50% range of this whole buy side and sell side, or is it dealing with the upper area? So it's kind of convinced that, oh, okay, market has cleared the sell side, so it's going to clear the buy side liquidity. How it is reacting inside a dealing, I keep watching them, I keep trying to find out that. But the difference, you and me, when you open your chart, it's in your mind where I can take the entry. If when you will start to look for the entries, you will start to overlook the price action, and this is gonna be always a mystery to you. Whenever you will get a winning trade, you will be very happy because I got a winning trade, and when you will take a losing trade, you will start to think that, oh, I don't know how to read this market, I need more price action, more way to understand the price action. But not, man, it's not like that way. Just change your thinking process. Stop looking for the entry. Switch your account to paper trade and keep watching the market day after day, at least 7 days, sometimes 2 days, 1 days. Just keep watching the market without marking anything. Keep watching them, and whenever you are finding something beautiful, mark them. Trust me, man, whatever I'm sharing you, you will be able to share more than me to me. You will tell me that, oh, brother, look, You are seeing this, but I'm seeing that. Isn't it more beautiful than that things? And I will say, wow, brother, it's really good. I have to study this. Let's see how many times it's going to work. Then I will study that things. Like Baragan. Do you really think that when the Baragan talked about this sniper line, I just simply say, wow, this is amazing and I'm gonna use it? No, man. I have watched that at least for 7 to 8 days. Is it really reacting? How many times it is going to react? Is that sniper line is reliable? When I found that, wow, that's awesome actually. That's really awesome. But you have to have an idea about the sub 1 minute chat. Then I told guys, you can try that sniper line. It's an amazing thing. It's an amazing thing. When I see some things you are trying to show me or push me that I don't like or I didn't find good things, I just say, okay, brother, just let it go. I'm not good at that. I didn't study that. I don't know that. You can, if it is good for you, please use it. So whatever I'm saying, I'm doing that after practicing, after studying, after seeing how it is reacting again, again, and again. When I see, okay, out of 10 times it's working 8 times, I will say, brother, please use it because it's working most of the time. You have to do the same thing. You have to watch the market without thinking about entries. There is no entry on this market. There is a art. This is an art, man. Please love it. If you love the chart will love you. And if it loves you, money will follow you. You don't need to chase the market will chase you. But first you have to love the chart. Without loving this chart you can't trade, and when you are trading you won't be able to read this market. You won't be able to find out all of this run. You are seeing this is run. I'm seeing lot of PDRs over there. This is just not a run. Here, when this market fall, if I'm not looking for a sell, I keep watching that. If I were in a sell, how could I take that sell? I was bullish. I'm not interested to look for that sell. So while I am in live, I don't talk about the falling, how it is going to fall, how it is going to fall. I don't talk about them, but I keep watching them, how it is respecting the PDRs. PDRs, how long it can work. Where is the my last barricade where this market is gonna stop, and then it will start to go toward my direction. So whenever I see the fall, I try to find out which PDRs is the PDRs more beautiful than the buy PDRs. The sell PDRs are more beautiful than the buy PDRs. I'm looking for buy, and the sell PDRs are so beautiful. Then I feel like, oh, okay. So next time, maybe I'll be able to use that sell PDR even if I'm looking for a buy PDR. Now it's all about the study. Sometimes I think like that way, then I forget. So I don't study that. Maybe you will study that. Even if I'm looking for a buy, if I see those PDRs is going to respect, I can take a short-term sell. Maybe. So this is all you have to do. You have to study the price action without thinking about an entries. This whole chart, this is a chart which is absolutely empty. But if I add this, now this is logical. All the levels you are seeing are reacting in a logical way. A very, very, very logical way. Why it is working like that way? Because this market is logical market. All you have to do, you have to study it. So sorry, but without studying this, it will be always a mystery to you, and you will always thinking that, oh man, this is not for me. But you have to do that, okay? Love it, T2 bro. Thank you so much, Varinder. It's been a long, brother. I don't see your name. How are you, man? So T2, in your opinion, was today shitty price action or is it tradable? The morning session was shit. I'm sorry to say, even though we have framed some good trade, but the morning session was absolutely shit. And the PM session was as much as beautiful, I can't describe. That beautiful the PM session was. But the morning session was absolutely shit. So those people who build the money don't think that you did wrong. Of course, we are lucky, but this morning session was absolutely shit. It was untradable, the morning session. I am a live streamer. I'm doing that. So I have to act like it's a good price action. I know what is happening. Trust me, when I was in the dark, I had no idea why it was reacting like that way. But sometimes it was reacting. I was very happy. But the PM session, it's as easy as drinking water. Every single PDR worked perfectly, precisely, so precisely. It was so beautiful. So the more bad price action was around the AM session, the best price action was around this PM session. However, guys, I don't think so anybody has any more question. And yeah, see you tomorrow then. Just please don't forget to study this market. And until the morning session tomorrow, cheers, guys.